All right, good morning. Good afternoon, or wherever you're at. I know you clicked on it. And this is going to be a 7-part series to trading. Of course, you know, if you've been on my YouTube channel for a while, you know I deal mostly with swing trading. And we're going to go over the quarterly levels, trading strategy explained. Like I said, it's going to be a 7-part series. And these are for mostly the people who are stressed out or been on their journey for a while and not profitable, or you've been blowing prop firm accounts, which is really popular right now, prop firm account after prop firm account, trying to trade on a 5-minute time frame. You know, you might have a job, and it's kind of hard to trade on a 5-minute time frame if you're working it. And I believe that longevity is key, and being patient is key. Again, like I said, most traders they stress over trading the 5-minute time frame, chasing every move. But I'm gonna give you 4 lines that you can use a year, all right, that can help you trade smarter and calmer. So let's jump into it. Let me show you how. Let's move on to our next screen. Again, this is the 7-part series, so make sure you start off with this one first, and then go on to the next one. So make sure you're able to practice this one verbatim. So first thing we're gonna do, we're gonna move into the next chapter, a section of this. So these are the quarter. There's 4 quarters in a year, of course, and we deal with this when I was in the military. We deal with this in business. When you pay taxes, you're gonna see quarters a lot. All right, you're not gonna see quarters on the 5-minute time frame, the yearly time frame, and a lot of people don't like to trade longer term because now futures has gotten really popular after the whole debacle about Forex. You know, not beat brokers, but after Forex went doing right after COVID, like I said a year or so ago, when they had the big MFF scandal, what was going on with the prop firms, and then, you know, FTMO pulled out, and a lot of brokers didn't want to deal with a lot of prop firms didn't want to deal with U.S. customers. So a lot of Forex personnel, they fled to trading futures. And so that's how you get a lot of new traders coming in thinking that you can trade the 5-minute time frame or turn $5 into 100,000 or to $1 million or whatever the case may be. So I'm gonna give you this just like investing, all right? And if you have a big enough account, you know, even I've seen some prop firms that have $500,000 accounts. I think it costs about $1,900 to $2,000. So the thing is, of course, start small. But when you have bigger time frames for what bigger accounts, for what I noticed, that you actually and with patience can be a little more profitable. But I don't want to get into that right now. What we're gonna do is get into there's 4 quarters in a year. All right, so there's Q1, which is January through March 31st. We have Q2, April through June 30th. Q3, July through September 30th, and then you have Q4, which is October 1st through December 1st, 31st. So we're gonna go off strictly the daily time frame because that's mostly what I use. Well, that is only what I use. And let's race off the indicators off of this. This is something I coded, so don't ask me about it right now. I might go over it in like week 7. All right, so you can see this was quarter 4, right? This was quarter 4. So we marked up, like we said, what was quarter 4. All right, October through December 31st. See, October 1st, 2024 through December 31st. So that is quarter 4. This is your high and this is your low. All right, so quarter 1, which is January, of course, 1st. Let's move down. Oops, let's move down again. Quarter 1, January 1st through March 31st. All right, so each quarter is what? 3 months, okay? So keep in mind, right here, you see this was the low of quarter 4. All right, and you can see the first part of the month, first part of January, it broke through. And I can tell you why this pretty much retest, or what I say broke out, and it didn't work. All right, it was a failed breakout. And I think in volume 2, not volume 2, but session 2, the next video, we're gonna go over why this failed. All right, but right now we're just gonna go over the quarters and how we can map them out. So with any pair you trade, right, let's just go over all these. So if you're looking at all these pairs, right, You can literally go through all these pairs at the beginning of the year, mark off quarter one, all right, quarter two, and quarter three. And then we have quarter four, all right? And let's just throw this in here. All right, let's move, clone, let's move it over here. All right. All right. So, why does this matter? Why does this matter? And you like you sitting here saying, "Hey, he's marking off the quarterly levels," and so why are you doing that? These are powerful levels. All right. If you can notice how they interact with these levels, they might break out and it fail. And if you know right here, it interacts with this. It broke out to the downside, then it failed again. It came back up. You can notice that we was on the uptrend. All right, and you can see how the high, it messes with this one a little bit, and then it comes back, and it's in consolidation. All right, so basically, just think of these are fences. They're fences that the market plays. They place inside of it. On one side, it breaks. On the other side, it fails or it retests. Whatever the case may be. All right, so why does this matter? Again, like I said, institutions measure performance quarterly. Price often reacts strongly at these levels, rejects, fakes out, or breaks out. When you know the quarterly high and low, all right, you don't need to. I would say you don't need to have 10 indicators. You just watch price respect or break these lines. That's pretty much simple. All right, you watch it respect it or break these lines. You can see this wasn't a breakout. This was a retest. Retest broke out above, all right, and things of that nature. And so, again, institutions, they look at the quarterly levels. Of course, I have not worked at the institutional level. I just noticed through the year, my 7 years of trading, that I noticed that they respect a lot of levels. And these quarterly levels are more powerful than, let's say, let's go down and see what we have. Let's see if we can even go that far back. Let's go back to the hourly time frame, or let's say the 4-hour time frame. Let's look at that. All right. Even on this one, right, it's the same thing. Price is fractal, like they say. Even in the same thing. See this high level? All right, broke out. All right, failed, retest, and came back up. All right, now GBP or pound dollar this year has been pretty solid with the uptrend so far. Started in January. It's up about 900 pips. All right, again, let me iterate this. Why does this matter? Institutions measure the performance quarterly. All right, price often reacts strongly at these levels, rejects, fakes out, or breaks out. When you know the quarterly high and low, all right, you don't need to have 10 indicators. You just wait for the price to respect or break these lines. All right. So again, that's how we're going to go over today as far as this wise. Again, make sure you screenshot this. And then what I want you to do is homework and let me know if you've done this homework. Make sure if you like it so far. Two things I want you to do after I tell you the homework. First thing I want you to do is make sure if you like this content so far, hit the like button, all right, and hit the bell and hit the subscribe button, and hit the bell for notifications so you can stay abreast and aware of this 7-part series for the quarterly trading levels and quarterly trading strategy. All right, I'm telling you, if you start this year and you implement it for the rest of this year, next year will be your golden year for trading if you just follow this lead. So, and if you think about it, it takes more patience, but at the end of the day, if you have the patience and stick this out, you might only get possibly 7 to 8 trades throughout the year. But the thing about it is, you'll be up in, you might lose a few, and then but you'll win more. All right, let's just say you have 10 trades in a year. All right, and in 365 days you have 3 trades in a year, but you might lose 1 but win 9. You're gonna be up in profit. I'm just speaking hypothetically, of course. All right, it just depends on your eye and which ones you're trading and the patience you have. All right, so just make sure second of all, make sure you screenshot this. And make sure you go draw all of your quarterly levels. Just pick a pair and draw your quarterly levels. And then just watch how it reacts off these levels, whether it breaks, fakes, or retests, whatever the case may be. All right, and then I want you to, after you're done, I want you to comment down below exactly, say, yes, I did this homework. and say wow or yes, I seen how it reacts off the quarterly trading, the quarterly levels. All right. Other than that, I want you guys to have a good rest of the trading year, and I will see you in the next video.